Today, I want to speak about BTC USD, and the reason for which I want to speak about this market is number one, because it is very interesting to follow for a potential trading opportunity very soon. Number two, because it has provided some very good opportunities in the past. So definitely lately it has been a very interesting market to follow. And number three, because by providing this analysis, I will be able to obviously give a lot of value, because I will be keeping the analysis as educational as possible. As usual, what we will be doing is first speaking about this market from a technical perspective. We will then go and see what we have from a commitment of traders perspective to see what hedge funds are currently doing on BTC USD. And by the end of the video, by using the combination of these two different analyses, we will be able to understand where is the best zone for a nice trading opportunity on this market. Now let's start from the monthly time frame. Now on the monthly of BTC USD, what we can currently see, we can see that we had extremely strong resistance here, again resistance here, and again resistance here, and all this resistance was broken to the upside with this strong impulse. And after our resistance level is broken, what happens? The resistance becomes support, which is exactly the level that the market went to test with this retracement. So what happened here on the monthly is that with this impulse, the market broke above previous resistance, went to retest it, and after a retest, you expect the rejection to the upside for the creation of a higher high, which is exactly what BTC USD has provided, and this is exactly what we expected. In fact, I had performed a full analysis on BTC USD during this retest, explaining all the reasons for which we wanted to see the creation of a higher high. And now that is exactly what the market has provided. Going down on the weekly, what do we see? Now, from a weekly perspective, we can see that the market had provided also an M formation. Now, after an M formation in general, what you expect is for the market to complete the M formation at the neckline, aka the previous support, now turn resistance. And at that point, either the market will break above the level or it will respect it with a rejection. Now, in this case, what happened is that when the market reached the neckline, it first respected it, went for another test of the monthly support, and then it rejected the monthly support to the upside, exactly as we wanted to see. And now the market has also been creating an overextended W formation in rejecting the monthly support. Now, after an overextended W formation, what you expect from the market is for the market to create at least a retracement to the 0.382 of the Fibonacci taken on the weekly impulse in this case. So from this low to this high, and we expect the market at least to reach the 0.382 of the Fibonacci taken on this impulse. So from a weekly perspective, we have a downside target, which is the 0.382 of the Fibonacci taken on this impulse, which is this area here, which in this case is also lining up with this structure level, which is the previous weekly resistance, which is now turned support. So we are already seeing a confluence of support at this area. Therefore, we can expect the market to be attracted at this zone to seek some liquidity before the continuation to the upside can start. So at the moment, situation on the monthly and weekly is extremely clear. The monthly has support, and this move to the upside is the rejection from the monthly support. And on the weekly, we have an overextended W formation from which we expect a retracement. Situation is extremely clear. Going down on the daily, what do we see? Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next video. Now, on the daily time frame, first of all, price action has been very easy to see and basically to predict. But you know that I don't like to say that trading is predictive. Trading is reactive. However, situation on BTC USD has been very readable. Let's put it like this. We had this impulse to the downside. After the impulse, the market started this sideways movement, which was a clear accumulation at the monthly support area, inside of which hedge funds were adding their longs. And I had created a full breakdown of BTC USD when the market was here explaining all the reasons for which from here we wanted to see a rejection higher. And I will link in description this previous analysis in which I explained all the reasons when the market was here for which we wanted to see the move to the upside. You find it linked in description. And then I spoke about BTC USD again after the market had created this W formation, explaining the reasons for which we wanted to see the market create a retracement to the 0.382 of the Fibonacci taken on the impulse. And again, that is exactly what the market did before creating the last move to the upside. And I will link also that previous analysis in the description so you can go and check it out. Now, at the moment, what happened? At the moment, the market has created this huge move to the upside. However, in creating this huge move to the upside, the market has also created an overextended W formation. Now, after an overextended W formation, at this point, we have it both on the weekly and daily time frame. We definitely do expect the market to give us a retracement. Specifically, we would like to see the market give us a retracement to the 0.32 of the Fibonacci taken on the impulse. Therefore, we have a daily target, which is at this area here, and a weekly target, which is here. At the moment, since we have a first downside target here, let's only keep our first downside target. Now, how we will be approaching this kind of situation, a situation in which clearly on the monthly, weekly, and daily, we can see that the market is overextended to the upside and in need of a retracement, how we can be capitalizing on this retracement. Now, before I show you that, let's first go and give a quick check at what we have from a COT perspective on BTC USD. So what hedge funds are currently doing on this market and in this market. Now on BTC USD, we can see that with the last report, hedge funds, even though the market was moving aggressively to the upside, have added more shorts than longs, making net positions decrease with currently 8.3k shorts and 5.9k longs. So during this move to the upside, we have seen that hedge funds have been adding some shorts. So definitely we can be looking for the retracement that we need. One last thing that I didn't speak about is that on the monthly time frame, we also have this supply from which the market had created all this rejection to the downside, and that currently we are testing again, from which we should definitely see a rejection or at least a reaction in the form of a retracement that we want to see from the first place, because we have already spoken about the fact that we want to see a retracement to this level. So how we will be approaching this kind of situation with students? Now, as usual, monthly, weekly, and daily combined with the COT data are the best time frames when it comes to the direction of the market. But the best time frame for the confirmations and entries is the 4 hours. And at the moment on the 4 hours, we can see that everything is bullish. The market has been creating huge move to the upside, without any kind of bearish momentum or bearish price action. So at the moment, everything is absolutely bullish, and we cannot be looking for any shorts because we would be shorting a bullish market, which is never a good idea. So what we will be doing with students is monitoring price action during this move to the upside, and we will be waiting for the market to shift from a bullish to a bearish market, and only after the market will shift from a bullish to a bearish market and provide to us one of our valid entries. At that point, we can be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of this impulse at the 0.32 of the Fibonacci taken on the impulse itself, which is also the completion zone of the daily overextended W formation. But first, we need to see a clear shift, otherwise the market will easily continue to the upside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. In fact, every single day I give you a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all questions that you have every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out, and I will see you in.